Hey, how's it going, family? Let's do a quick audio check. Richie's saying you couldn't hear the music, but you could hear me. Well, as long as you can hear me, that's good. Can everybody hear me? See my screen? We'll start to dig on in here. Let me know in the YouTube chat. All right, good. Check, check. Looks like folks can hear me. Wonderful, wonderful, wonderful. All right, so we're going to be doing a prep a little bit different than we normally do. Normally, every morning I'm doing, we'll call it kind of a micro view prep where we're just looking at like the last couple of weeks of price action. This prep is going to be kind of a macro view, and we're mainly going to be on the weekly chart. So I'm looking back about 3 years on the weekly chart. I had a trend line from before COVID started. After we recovered in COVID, right around September of 2020 is when that Tesla-Apple split happened. And we had that couple of months where we're looking a little more bearish here and there before taking off again for more. I marked some key levels from around pre-COVID high, post-COVID recovery high, and the pullback level, right? And I point all this out just to say that same trend line is where we bounced in June for that nice rally up back to trend line from our high of year and our March rejection. We rejected at that same trend line in August. And now we have come back below our trend line that has been providing bounces, and we're starting to reject it a little, right? Yeah, I know everyone on Wall Street is very bearish, and everyone is saying, oh, we're going down, 3,200, 33,000, yada, yada. Well, before we get there, if we get there, usually we're going to see some oscillation and some bounces to try to, look like we're recovering, and then we'll finally get down to some of the levels that everybody's screaming about. But for right now, let's try to look at these kinds of levels from pre-COVID, post-COVID, that kind of thing. We are starting to test and peek into below that high from the post-COVID recovery, which held us down until we took off for more through the rest of 2020, through 2021, and right up here to 2022, where we've now come back to kind of reset the board. At a macro level, if we can't find support and buyers around this 3587 to start to send us back up, we can start to expect this 3400, the pre-COVID high, and this 3200, the post-COVID pullback low that we set a higher low off of before taking off. This is a weekly chart, so one thing to note, as we were just trucking higher, you had a lot of small weeks, but now we're having some big weekly moves. The market is continuing to oscillate to find buyers and sellers on the trajectory that we find ourselves on. So every week, whether we go up today, down today, whatever it is, we are seeing some good moves throughout the weeks. Now that we're arriving back at these key levels, I just want to point them out to everybody because as we get to testing them, we are probably going to see some interesting bounces. So we don't want to be overly married to any trade, and we definitely don't want to be overly married to a short to 3,200 this week, right? Can it happen? Sure. Is it likely that we're just going to have a weekly drop that goes down 300 points? Maybe not. So I just wanted to cover some of these levels with everybody on a number of these names to talk about expectations, right? Can we continue lower? Yes. Do we have any good news on the forecast that should be providing a bounce right now? Not really. But in June, we didn't really have any good news either, and we started to bounce. And then in July, we heard that June inflation numbers went down, and so they said, oh, cool, let's go up. But we still saw then in August that July inflation numbers got a little worse. And so, we basically have to go from key economic event and earnings and whatnot to see what is on the forecast moving forward. The rest of this year could kind of contain us, maybe between 4,000 and 3,400, where we're just oscillating in that area. But this is macro level, so we're not going to try to dive down into where is it going tomorrow. We're going to just look at key levels above and below at a macro view to start thinking about, if we see a settle point where we could bounce back up to before rejecting back down for new lows. Even, let's see, the October little rally that we had up, second it broke back below recent lows, now we're going down to new lows, right? So it's always good to look at where could we bounce and start a rally to retest things before heading lower, especially because when we look around at a lot of key Keltners, we were already down near third Keltner when we got that strong pop after CPI. So we've kind of covered ES. These are the next big key levels. Are there smaller levels in between? Yes, of course, right? Current low of year, yada, yada. But these are the key ones I want to focus on for now on ES. Let's move on to some of the other names. If you guys would like, I'll jump straight to SPY and QQQ, and then we'll head on back and hit each individual ticker. So for SPY, here's a bunch of key levels. I have, again, grabbed some key levels. This is a little mess when we're zoomed out. I grabbed some key levels from pre-COVID drop, post-COVID pullback, and that's what some of these levels are over here. Let's just zoom in that area. So you've got your, zoom in this area. There we go. You've got your pre-COVID high around that 340. You've got your post-recovery pullback around 320. And a 330 kind of in the middle there, right? 340, 330, 320. I know those sound simple and easy and level numbers, but that's where the wicks fell near, right? Then beyond that, I did a couple of fib tracements, one a little smaller, and one from the COVID lows to our all-time highs. And basically, it's just providing a nice roadmap moving forward. Now, just for fun, let's drop down to a daily so we can see how these levels look as we zoom in. We got down to 34.11 is the new low. It's a little hard to see. Sorry, let me try to zoom in a little bit here. But I did end up with a fib 50% retracement from the all-time high that we hit, and that fib retracement was 349.12. We hit 348.11. We opened near that 349.12. So basically, I will have some key levels right next to some interesting fibs from a couple of retracements on this whole run up. So for SPY, we are going to be likely opening back near this low that we started to rally up from. We set new lows, popped up, popped back, closed right near those lows around 357. So if we start to go back down and lose 355, 354, we can expect a retest of this 348, 349. I do have a little zone of support around 345. And then as we start trucking down below that, got a couple of key levels, 337, 339, 330, which was that kind of midpoint between the pre-COVID high, the recovery low, right? The recovery low was at, pre-COVID high, post-COVID high, recovery low at 320, near that 319. Let me just make sure on my look, let me make these a little larger so that we can see the numbers a little better. There we go. So I know this may look like a mess of levels. When you dial down to, intraday time frames, I'll just show you quickly. These numbers are spread out a little further, right? So it's not, doesn't look like I've marked every darn level, right? Oh, don't start being slow on the loading. Come on. No, Spy, don't do it to me. Or Toss, or whoever you are. There we go. So now you can see these levels are a little better spread out when you're down on an intraday, right? You can see this zone of 348.11, which is the low that got set, right? There's that 349.12. We've got a zone of support. We got back to that 370, fell to 365, yada, 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 right? So as we zoom down to the intraday, these become a little bit, clearer of a roadmap as we move further up and down. But let's move back to a daily. Oh, and it loaded quickly. Nice. So if we start talking about slipping lower this week and next week, we are talking about retesting this new low of year. Past that, I've got a little zone of support near 345. Sometimes I mark it as a rectangle. Sometimes I mark key levels. As you get more familiar with how I like to chart, you'll learn why, and I'll cover that. But zone of support near 345. We've got a couple of key levels right underneath 340. We've got one at 330, 325, 320. And even past that, I've got more that are further fib retracements. Again, if we go back to a weekly, I grabbed a level in the middle of the COVID run-up and connected it to the high right after the COVID bounce. I also just connected from COVID low to all-time high. And it gave some interesting overlap. So if we start to go below that 320, 300, 290, we're getting back near, the COVID recovery, half recovery, let's call it, and settlement. And from where we hit on Thursday at that low, that is a 50% retracement from that high to the COVID low. I'm sure maybe some of you have seen little headlines like, oh, we just gave up 50% from the COVID, low to all-time high. And that's seeing it now on the chart. So just talking about any kind of pop that we might get, if we can hold that 50% retracement and this 100, which are basically, around 349, 354. If we can hold it there for a week or so, this week, we do have a lot of earnings this week. Let's take a quick look at our earnings schedule. If you're in our server and take a look, we have an earnings. Yes, that's a good point, Ed. Yes, there are some interesting gaps between 350 and 320. We can definitely go back and look at that. So this week on earnings, we have more banks, more banks. We have some travel that's starting to pop up, some healthcare as well, Johnson and Johnson. Um, there's Procter and Gamble. There's Abbott. Where was Abbott? Right there under Procter and Gamble. So we've got banks, we've got healthcare, we've got some travel coming up. United. Just look around. There was a few more. American Airlines. We have some telecommunications. AT&T, Nokia. We have some chips. IBM, Lam Research. We have some ad space. Snap. More telecommunications. Verizon. American Express. Kind of more finance. So it's a pretty mixed week. Heavy on finance, with some travel, some healthcare, some chips, and telecommunications. And then the big ones, Netflix and Tesla. Definitely ones to watch. That's just this week. The next week and the last week of October bring a lot of big tech. Apple, Amazon, Google. It's all coming in the next couple of weeks. Could it give a reason to rally? We'll have to see how those numbers come out. We have seen recent PPI numbers, producer price index, they've been on the rise. But we've also seen, a number of big companies doing layoffs and whatnot. So we'll have to see how those earnings come out. This year we've tanked on all earnings pretty much until the June and July earnings, and then we had a reason to rally. So just saying, we don't have a lot of reasons to rally. So it'll be very interesting to see what comes out on earnings over the next 3 weeks. It could set us up for some kind of small rally. Maybe not getting back to these recent highs, but maybe getting up to retest the same trend line around a key level like 400. So we are at that 50% and 100%. We know what the 50% is. The 100 is just from the smaller retracement, but I put both retracements because some levels lined up really close to each other, and when that happens, you get a zone, right? So we have a zone of support here. We peaked into it and ripped right back out of it. As long as we can try to hold above that zone of support, as these earnings roll out, we might just see a reason to hold that and push back through 370, 380 to 400 and test this trend line again. Not trying to be a perma bull around here, right? Just trying to recognize that since COVID and the recovery, we are getting kind of back to close to a reset. Getting to that 340 is the reset from pre-COVID. We're trying to hold near that 350. So, very interesting levels coming up here. Do we have targets for the downside if we break down? Absolutely. That's kind of the point of this prep. Was trying to get to not only can we potentially hold at something big and critical, but if it gives out, what are the next steps? Let's go take a look at QQQ, because I did some of the same. From COVID low to kind of recovery, and then from the pullback to all-time high, we end up at some interesting levels. Let's zoom into where we currently are. As you can see, from both those retracements, we're trying to hold around this 251, 254. If we can find support there and try to get back from 260 to 280, then we're talking about a potential another rally. Again, we have to see how earnings go, right? We got into June, we had a lot of earnings that came out, and then, we started to look good, came back, then we took off, right? So we could get the same here going into some big earnings over the next few weeks. Just like this candle, imagine it over here. We could start to push a little bit, come back, then take off. Again, if earnings go well. If not, then we have our next key levels of the breakdown. We got to tap this 254. Next stop after that, 251, 47, 44. Our key levels. Let's zoom out just a and again, I marked kind of the same thing. Pre-COVID high, kind of around the recovery and pullback. Where are we? Boom. So there's that pullback from August, September of 2020. I did grab kind of a high right after the COVID high when we did fully recover. Just to say that some of these levels are from right back around here. What I'm kind of saying, what I'm calling resetting the deck, right? We were moving up on a, nice normal market. Then COVID happened. Then we recovered. And we've made this whole push higher over the last couple of years. And we've come all the way back. And just a little slip down to say something like 236 is that COVID high effectively resetting the board back to where we were before all of this COVID madness. So, will be very interesting. Below that 250, again, 47, 44, 37, and 35. Then it starts to thin out, and we're talking about some interesting retracements like the 618, the 50%, down at 220, 209, and 200. If we start getting down to something like 200, we are close to the last major low before COVID, right? So we are we are approaching resetting the board. As we look around at individual names, we will see some very interesting differences between which names are getting close to resetting the board, which names have already reset the board and gone way past it. God, come on, Toss. Do not freeze on me when I'm live. Let's look back. We do have some interesting gaps here. And yes, a number of gaps have already been filled. Even as I just look around, pretty much every gap from back here has been filled. I know that's one thing that I said we'd go back and look at. Oh, come on, Toss. Don't do it to me. There we go. There we go. All right, we'll take a quick look at SPY again. And yeah, like there are some interesting gaps. Let me zoom in here just a teensy. There are some interesting gaps. Most of them have been filled. I don't think there's any significant ones that weren't filled. Even looking at this, it was filled slowly but surely. Yeah. In fact, that 345 that I sent over, I extended it over, that I said it's a zone, it's part of a potential partial gap fill that we had left. So I know this is just a hair messy. But again, I did this on a macro view so that when I go down to my normal daily preps, these levels are a little further spread out. But let's start digging into individual names. Some are going to seem a lot stronger than others. Apple. Very strong, right? This is pre-COVID, COVID low. And way up here is that August split and pullback, right? And we have barely even started to test that August high before the split. The June lows did get down pretty close to where that weekly candle opened, right? But right now, we are not even back down to those June lows. Even though the market has gone past the June lows and set new lows, Apple pretty darn strong. And if you notice, it's starting to kind of settle into a wedge on the weekly. So if Apple can continue to stay strong above this 138, yes, we've slipped it. Let me zoom in a little bit. There we go. We slipped past it, but we did close in it. Could Apple hold at this 138, start to make a little bounce into earnings, maybe have some decent earnings and start a push back up in this wedge? Could happen, right? If we start to give out this 38, we are coming down to retest 33, 31. And, should we start to give out that June low around 129-ish, we could be talking about this 123, which is a 618 and a key level from the past. Just for fun, I want to show a stark comparison. Apple looked pretty strong, holding up well at that August 2020 high from the split. Look at Meta. It set a new 3-year low. If we even go back 5 years, it set a new 5-year low. Meta is below the COVID drop and arriving at the last significant low before that. Am I saying this is a great spot for Meta to bounce? No, I'm saying look at the relative weakness of this name. It's not been doing well. It's been getting beat up. I mean, look at this weekly candle that went from 320 almost to 220. And if you've been around trading this year, you've seen a lot of this. Meta has just been beat up. I have not traded it this year. I think pretty much past this candle, I said, this thing is in trouble. Let it just keep dropping. Are there shorts in there? Absolutely, right? But either way, now Meta is arriving back at these key lows. I even went further back in time to find the next significant low. So could it start to settle around this 120 price point? What do we got here? 113, 123, 137. Pretty simple, right? I only put a few key levels on this. A, because I'm not dying to trade it. But B, because we are back at this last significant low below that COVID low, right? That is kind of our midline. I've got that 113, which I think I got to go back 10 years. There you go. Kind of that last settle point before it took off and set new highs and just kept going. So, Meta is arriving at an interesting decision point. It's at the midline. If it can break back above 137, we could start talking about an interesting recovery bounce. If it starts to break below 113, this thing is very dead. But breaking below 113 could set up some interesting shorts as well. 113 could easily go down to 90. 71. So, not to kick a dead horse when it's down, but I just wanted to show that stark comparison. Apple, still remaining strong. Meta, I would not want to be Zuck. So, let's go back and look at AMD. Please excuse this mess. I do need to get in and remove some levels, but for the longest time, Meta was in all of those levels. And when you get down to the daily, they're helpful. We broke out. We came back trying to hold those levels. Now we're back down at 56. 56, very key level on AMD. As you can see, before COVID, we fought up and tapped that 56, even that 60. Then we had the COVID drop, which brought it down near 35 cents. Then we consolidated under 56 for weeks, for months, just kept sitting under 56. Then we took off and we just shot up, 100, 80, yada yada. Well, now we're back at 56. Ugh, I thought I cleaned this up a little better. Sorry. I was charting on and off today. But we had that COVID drop and recovery, consolidation under 56. Grabbed some levels from pre-COVID, from the pullback, and from taking off. So, ultimately, AMD been very beat up, down near the third Keltner, which is usually getting to an oversold area. We even closed right near 56. There's a thesis to hold 56 and start to bounce. But if we do slip it, 52 and 50, also big key levels from that consolidation before we took out 56. So on AMD, the board has been reset. If it can hold 56 and start to bounce, and I'll even say if it can slip and hold 50, get back above 56 and start to push, it's at an interesting point to recover. But if we start to lose 50, then I left the levels kind of farther apart. We could see a slow drip down to 36, and we'll leave it at that. Ultimately, as beat up as this is, 56 is resetting the board back to COVID levels, COVID highs. So we could see some interesting support start to come in. Investor sentiment, right? And again, I'll clean up all this mess to make it a little better for us, but this is where we should focus right now, on AMD. Amazon, some very interesting spots. Let me get off of a 10-year, I don't need all that. Oh, Amazon. I did mark a little gap here back in Amazon. Technically, pretty much got filled in the COVID recovery, but you can see from the April, May, June lows, we pushed off of this zone. And now we're arriving back at it. So, Amazon has reset the board as far as pre-COVID highs and some of those recovery highs. Amazon's gotten back to reset the board. And we're at this key and interesting level of support, this gap. Technically filled, right? But filled in a very quick, dramatic fashion, meaning there could be some investors waiting back there. So, key levels, 104.25, 101.78, which is a 50% retracement from COVID lows to that COVID high, recovery high in April. Yeah. In fact, this is just one retracement. I went from COVID low to that high where we saw a decent pullback. And I left it at that because I saw interesting interactions around the 161, the 261. I mean, look at that. 188.5, 65, 15 cents off. Anyway, I like this little fib retracement on this. I like this zone of support. Basically, we have gotten back to a 50%. If we can hold this 101, 104, and at the worst, this psych level 100, basically, we could see a nice settle, report earnings, and bounce. If we can get back above 113, it will kind of confirm that holding and sentiment to try to get going again. And, basically be trying to move from this 104, 106 to 113, 122, and then to retest recent high at 147. Again, this is all if we have decent earnings. There's not much reason or sentiment to be looking long, but I'm always going to be prepared in each direction. If we start to give out that 104, it's 101, 100, 97-ish, and then 91-ish. BA. This one is a huge mess. This is the pre-COVID high, which we have never gotten back to retest. We basically only got as high in the last couple of years as to fill this gap with a little extra, right? But from COVID low to, we'll call it kind of a recovery high before settling back, I did draw a little fib retracement, and we are coming back to the 23.6. We've got a zone of support here for BA. So basically, trying to keep it as a simple thesis, we can hold this 114, 119 zone that we held before and started to bounce from. We could be setting in an interesting double bottom where BA could try to make its way back to 138, 154, and then back to this 170. Should we start to give out 119, going to 113, and then we're talking psych level 190. If we do get to that 90, we're talking about pre-COVID, or the COVID drop low. And overall, relative weakness in BA back down at COVID lows compared to some other names that recovered and set new highs. BA just been getting beat up. CAT looks very different, right? At our COVID lows, kept on trucking. I basically just did a COVID low to this recent high, maybe all-time high on CAT at that 246, and we are kind of back at the 50%. We've got this 161.1 that provided support. 167 is that 50%, and we're starting to try to push back to the 618. So could be an interesting spot of support between this 161, 167 if that can continue to hold on CAT. If we do have another, little sell-off next week, as long as that can hold, could set up along back to our 193 and maybe even back to that psych level of 200 and beyond. If we start to give out that 161, 167, then we're talking 148. Which is kind of pre-COVID highs, right? And if she slips any further past that, we could be talking 125. Kind of where our COVID bounce stopped and had a pullback, got through, and then consolidated. So, just some key levels on CAT. Coin. Vastly different. It IPO'd in 21 and just been going down, but getting to an interesting point. We had our all-time low on this down near $40 in May of this year, and we're you could say drawing a trend line from that low and the lows closest to it, kind of coming into a wedge here. We do have a little gap here that sort of got filled in that wick around 100, but we are kind of settling into a flat bottom wedge. I did mark some key levels in here. We're trying to hold above this 23.6, basically the all-time low to this recent high. I made a retracement. So we're trying to hold around that $60 even. Let's see if she can continue to hold into earnings or maybe even rally up to this trend line before earnings. And we could see an interesting breakout if we get over 80 to try to get to 100 and that 120. And, if she starts to slip 60, then we could be talking about getting back to 52, 46, 40. But overall, even though it's not the best looking chart, it's a newer name. It may have found its low and could be preparing for an interesting move up. Google. Google. So strong. I mean, look, our pre-COVID high, way down at 76. We're still way above that. Our recovery high, around, let's say 86, 85. Still way above that. So, definitely has not gotten back to resetting the board. So definite relative strength, just like Apple. I did a couple of retracements on this from COVID low to all-time high. And from, what is this? Looks like a December of 2020 low up to May of 21 high. Basically, I did another retracement just because as I tested out different retracements, these got close to the overall retracement. And when they get close like that, they provide nice little zones. So I did mark this zone of support. Let's see on Google if it can continue to hold above 95 going into earnings, maybe get a good earnings report. We could be talking about pushing back through 100, retracing back to 107.5, 112, maybe even 121, and back to this recent high. Again, if earnings goes well. Should we start to lose 95? We've got 93.5. We've got some around 89 and then 85. And 85 would be kind of that last low in 2020, last kind of pullback before taking off on that big run that we had during 2021. GS. Kept this one very simple. We've got our pre-COVID high at 250. We've got kind of, I had a little zone here and I just made it a key level around 260. It was the last low from 2020 that we set a higher low off of in 21 and took off from. And we've got 275, which is kind of where we tried to bounce in that May and June time frame. So if we do keep slipping on GS, I believe earnings are this week. Yeah, the 18th, so Wednesday. Let's say that we have a negative reaction on earnings. I am kind of expecting 275, 260, 250 to be where they drop it to. But ultimately, if we can hold above this zone and maybe see some upward movement off of earnings, back to 320, 360, these recent highs. And should we start to give out 250, we have reset the board for GS. And we can talk about 220, some of these recovery highs. JPM, I don't think I'd even touch this one. I'm just going to skip it. Microsoft. So, relative strength again. We can see our COVID high still well below us, near that 189-ish, 190. This is the September and October of 2020, where the whole market had a pullback and kind of a wedge before heading higher. Well, that is where we are arriving now. Kind of hit the middle of that wedge at these recent lows. when we slapped. I think it was like 213, 219. Either way, we hit 220 and we pulled right back up near this 232. In fact, I think we even got to it, but then closed below it as far as the weekly candle goes. So, like, I think this candle did get green before coming back red. Ultimately, we do have earnings. Come on. Oh, come on. Nope. Microsoft. Earnings. 10/25. So end of this month. So we got a couple of weeks on Microsoft. Let's see if it can hold this 220, 225, and try to push back above 232. Next step would be 241 and 255. We do have a little trend line that we would be testing. Not the cleanest, because I probably made it on a smaller time frame than a weekly. But overall, let's see if we can stay above 220, 225. We are getting a zone of support from back in time near those post-COVID recovery highs. And if we could hold there, we can get a nice bounce back to that 241 and beyond. If we start to lose 220, we are talking 210, 205, and 197. 197 would be getting back to that post-COVID recovery September low that we set a higher low off of and went higher. So that'll be a pretty big level. And should that 197 give out, we do have this pre-COVID high at 190 and the 23.6 at 187 or 183. Netflix did set a new 3-year low, but not this week. It was back in April. So Netflix has had some pretty crazy drops when it comes to earnings. This one was on earnings. If you look down here, this one was on earnings. Yeah, I believe each one of these, they talked about losing subscribers because people going back to work, no more work at home, yada yada. Obviously, we'd have to go back a little further to find the next significant low. But I did a little bit of a retracement from back in the COVID lows to some recovery highs, and then a little retracement from these new 3-year lows to our recent high. So as we zoom in here, basically since July, we got back above the 618, and we've been holding at about that 216, 217, holding above that. If we can continue to hold that going into earnings, which I believe are this week, yep, Wednesday or Tuesday. Oh yeah, we covered that. We do still have a big piece of that gap laying above us. We could see an interesting positive reaction for the first time, and we don't know how long, to this earnings because they're starting to open up that new tier. We'll have to see how many subscribers they get on it. You know, Netflix is still a powerhouse in creating content. They're still a big contender against all the other services that have come up since Netflix, like your Disney Pluses, your HBO Maxes, yada yada. Netflix is still, you know, one of the top dogs, still producing a ton of content with a ton of big stars, yada yada. We're in this consolidation from this 216 to this 251. Not surprised that we've sat here going into earnings. Could we get a nice little positive reaction that starts to send us back through this gap fill? We never know. We'll have to see how the numbers come out. But if we start to give out that 216, 207, we're talking 200, 183, 162, that recent low, because we should be prepared for a negative earnings reaction. It has been happening repeatedly. But if we start to see that we did have a positive one last time. I think they did add some subscribers even before this new ad-based tier. So let's see if ad earnings, maybe they added subscribers again, and they have this new ad-based tier, which could accelerate it even more. Nvidia. Nowhere near the COVID lows, right? And these are COVID lows post-split, since Nvidia had that split. We are settling back at a little zone that I created from this last low in March of 21 before taking off higher. And I think I connected that just to this recent low. So we could be in this zone, we could be at a zone of support at around this 108, sorry. Nvidia does not report till November. And yeah, chips have been getting beat up lately. So if we start to lose this 108, we're talking psych level 100, 97, 96. If we lose that, going to 84. 84, 69, 45 gets us back to COVID lows. Pre-COVID highs sit around 77. Sorry, 79. So should we start to give out 108, talking that 100, 85, 80. But if we could start to hold around this 108 in this zone of support, we could start to potentially see a little bit of a rally into earnings, which I'd be targeting that 125 and 147. You could even call this low at 140 also a key level. Roku and Shop, I'm pretty much think we're ready to remove them from our ticker list. Please feel free to voice up. But Roku, new 3-year low. Shop, new 3-year low. These things are probably not going anywhere for a while, so I'm going to leave them alone. We've covered SPY. I did have a little fun with SPX as well, doing from COVID low to getting through pre-COVID high wherever we topped out. In again, that September of 2020. And I did a retracement from COVID low to all-time high. And it gave some interesting levels of support. So, we're trying to hold at this 3505, 3588 zone, which lines up with 50% retracement from the low to high, and the 100% retracement from COVID low to what I'm calling, post-COVID high before the pullback in September and August. So, at an interesting spot where we could try to hold here on SPX and make a little recovery bounce. Again, the target would be 38.15, kind of where last week's rally died out before coming back. If we start to give out this zone, clearly we will have some levels in between, psych level 3400, but the next fib levels at least are going to be around that 3289 and 3200. And again, folks, I'm not a fib expert, right? I only use them here and there, and usually on a macro larger time frame. If you look, I just drew a couple of quick ones today, but as you look around at price action, there's a lot of interesting wicks that ended up hitting all those. I mean, even anyway, I know these are wide apart, or these levels are far apart, hundreds of points, right? But I'm trying to just kind of mark Some key things off these fibs to talk about: holding, destination, where would we go to next, that kind of thing. And just like we saw in ES, we are approaching those run up into the splits highs. So the board has somewhat been reset, and fully resetting would be getting back to this pre-COVID high at 33.93, right near that 3400. So just keeping it a little simple on SPX. I already covered SPY. Let's take a little look at Tesla. So I did a couple of retracements from COVID low to when she split, and then from where she finally based to the next high after that run. It gave us some interesting overlaps on the fibs where wicks have been hitting. So Tesla, a little more crowded than I'd like. 200, very big key level. Let's look left at 200, right? 200, kind of where we held before big run up, and where we held close to, more like 208 back in June. So 200 going to be a big level, but past that, 190, 180, what is this, 165 to 167, and then 136 if we're talking more downside on Tesla. She is beat up. She has been sitting at third Keltner and still heading lower. We all know there's the whole Twitter thing. There was, I think, some report about missing some deliveries. We've got some gaps above us, if you notice, around 260. So let's see if this big psych level of 200 can be enough, and maybe even that 190, which is at a 38.2. Let's see if that can be a zone of support that starts to bounce Tesla. Let's see how earnings go this week. But we've got some levels further down if she's just going to keep slipping. Being at third Keltner going into earnings, it could be time for a little bit of a relief pop, whether the earnings are that good or not. We've seen plenty of times where they go down on good earnings, they go up on bad earnings. So, interesting levels. Oh, that's pretty much it, folks. So, just kind of wanted to give that macro view on everything. I'll go back to the ES. We have reset the board on the run up into the splits. Basically just calling that September to October time when the splits happen on Tesla and Apple that shook the market for a little bit before heading higher. We reset the board to there. Should we head down to 3,400, we have reset the board to pre-COVID highs. And if that gives out, we're talking 3,200 post-split lows. Also, kind of where we recovered, in the recovery, where we topped out for a second before finally pushing for full recovery. So, hopefully everybody found this helpful. We're right at an hour. I said I want to keep it to 40 minutes to an hour. So, tried to hit pretty much every name in our ticker list. A couple of names are going to fall off of our ticker list. And at any point, for any of our new members, I am always open to adding tickers to our list. Our Beast system will work on any ticker out there, really, as far as giving us the roadmap. So, hopefully everybody found this helpful. I'm going to go ahead and end it here to keep it right near an hour. Thanks for tuning in. This will go to a recording so that you guys can watch it again later. Thanks for tuning in, and we'll be back in here tomorrow morning. We got, futures open, just for fun. Just for fun. Let's drop on down and see what futures are doing, and let's throw on our tool. Come on. Oh, anytime. There we go. All right, looks like futures open, gave a teensy little wick down, and shot up to our open range sell zone. So for any of my futures traders that might be around tonight, I will as well be around. Probably trading some futures, just looking at things. Sorry, give me just a second. Let me go to a 3-minute. All right. We shot up to our open range sell zone. Would not be surprised from here to make a slow little fade back to test 3600. And if that gives out, back to test open level 3587, maybe even this 3575. Usually overnight, I'm expecting to see futures stay in its opening range. Plenty of times we move outside of that opening range, but, just looking at Friday, made a dip to the lower buy zone, got just a hair past the sell zone, back to the buy zone, mostly overnight contained in the open range. Even going into CPI, kind of the same thing. Slow drift down to buy zone, right back up to our sell zone, made it to that purple hashed before coming back. We can look at even nights that weren't on dramatic data. The FOMC, open range, buy to sell, open to sell, back to buy. So, just looking at where we are tonight, even though we don't have a ton of candles yet, just like I was saying, I'd be going short from this 3606, and we're starting to even fade as I'm talking, likely coming down to test 3600, 3602. So definitely use these levels tonight on ES. That's it, folks. Thanks for tuning in. Let me go ahead and end this stream. We'll catch you guys in the chat tomorrow.